more about the numbers, we have Arun Jain, Chairman and Managing Director of the company, joining in with us this morning. Thank you so much, Mr. Jain, for joining in with us this morning. And firstly, I want to start talking about your numbers. You have actually lowered your EBITDA margin guidance last quarter from 22 to 25% to 20%. Now, your 9-month and December quarter run rate is a bit lower than 20% currently. So, are you still confident of maintaining and achieving that 20% level in Q4?
Yes, Q4 we are looking for a better than the Q3 numbers. So there was a delay in the licensing sales in the European market after Ukraine war is there. So some of the deals which are supposed to be signed in last 6 months got extended to Q4, but those deals are still in pipeline. And that's a possibility of meeting the number of 20% EBITDA for the whole year.
Right. Good morning, Mr. Jain. This is Cheryl also joining in the conversation. And from margins, let's talk about our revenue. Your revenue growth has continued to be sluggish this quarter as well, despite that one-time revenue booking in Q3. Could you tell me what led to that, and also by when do you expect a bit of momentum reversal on growth, given the fact that the management had indicated a visibility of annual growth of about 20% for FY23, which for now seems largely on track, isn't it?
Yeah, so if you look at our business, it's not a quarterly business. So we always say last 12-month business is better to monitor in a product business, because a single license last year we had same quarter $14.5 million license, and this year 8.8 million. So around 6 million shortfall of the license is equivalent to 48 crore of the up and down. So the margins and the other things get impacted by the quarterly results. But on 12 months basis, we have grown healthily 21% year on year on the revenue stream, and all the parameter platform growth at 43%, except license revenue. All other parameters are in sync. Our three businesses, GCP, which is a retail banking business, corporate banking business, and AI business, all three are very healthily moving. We are able to penetrate in the market like France, Germany, which are difficult market for any of the Indian product players. We crossed 2,000 crores. So I think all the indicators are right. We are very, very excited right now in our journey that we are getting that kind of traction in a product business where we are building a new innovative technologies and still generating high amount of profitability. Normally in this phase of the cloud technologies, which we call microservices, API, cloud services, and headless technologies, people are still in investment mode, and we are in a profitable mode. So our management team, our customer teams are very, very bullish about the future of the company.
Right, Mr. Jain. And lastly, just want to know in terms of, the company has won 6 deal wins over a Q3 FY23. But you did highlight that there is some improvement coming in the deal-making environment. So what's the pipeline looking like then?
Yeah, I think this quarter we should be signing better deal than more than six. So I will not able to specifically ask that what the contracting gets done. Some of the deals will get committed, but actual contracting may take time. But we are assured of better than the current quarter number for the coming Q4 numbers. So overall, it's very, very exciting. Our AI technologies are very, very exciting in the American market. They are having a very big pipeline of more than 15 clients in next 6 months, which are in the somewhere POC and closing stage. Let's see how much of time we can sign it up.
All right, Mr. Jain, we leave it there on that optimistic note. We wish you all the best for the last quarter of FY23 as well as for FY24. Thank you so much for joining us on ET Now to talk about the earnings for Intellect Design. And